Multifamily Mindset
Podcast. Think bigger.
All right, aloha, and welcome to the Multifamily Mindset Podcast. My name is Tyler Deveraux. This is Jackson Campbell, and today we're going to walk you through market research, man. How we research these markets that we focus on, and how you need to do the same things to breed massive clarity in your investment business.
And let me tell you what, we are excited to dive into this. So excited, in fact, that Tyler prematurely started the episode before Strat was even recording, before we got this take. So this is take 2. We're just so excited to dive in here to market research. We're pumped about it.
It ain't the first time I've been premature, bro.
Didn't want to bring that up, but you know,
That's your mom.
It's probably true. What? I missed it.
That's my bad.
I missed it. I really don't think I heard what you said.
I said, talk to your mom about it.
Hey now. All right, dude. Well, let's dive in. If it's your first time here, this isn't how the entire episode's gonna go.
I don't know. Maybe, dude. I don't know.
Feeling zesty today? No.
God bless you.
We will talk about real estate stuff. We are going to dive into, like how Ty alluded to, we are going to dive into market research, and I'm excited. It's going to be a great episode because it is such an important aspect to multifamily real estate. And today we're going to dive into why it is so important. But if it's your first time here,
framework of how we go about that. Sorry, bro.
So go ahead.
Just like the framework of how we go about that. Like, it's important to understand the system of the process. But yeah.
Yes, dude. Yes, and how valuable it really is, not just to one individual on your team, but to everybody on your team, right?
Yeah.
It's so important. But if it's your first time here, welcome. We're so excited to have you here. Tune in every single day. We have powerful, impactful episodes Monday through Thursday with Dallas Pruitt, the Daily Drips. You don't want to miss out those mindset principles. Get your day going. And then on Friday with myself, Tyler Deveraux, where we talk about real estate. We're going to dive into some real estate subjects, but also it's impossible for Tyler and I to chat about anything without also chatting about mindset. So we'll definitely
100%.
always throw in the mindset principles here on the why we do the things that we do when it comes to multifamily and the mindset principles behind that. But let's dive in here, dude. Enough of that. Market research, Ty. In a nutshell, why is market research so important?
Do you want to weaponize yourself? You have to make decisions, man. You need to be able to weaponize yourself with the information needed to make decisions. But I'll say this, so we need to stay informed, right? But like where we stay informed and how we stay informed is critical. Like, I don't go watch the news, right? Like, that's not where I get my information. I want relevant, actionable type information. So we want to weaponize ourselves with this information so we know we're confident, like, as to where we buy and confident as to what we're buying, meaning like what your strategy and things should be in the market that you're in. And then, dude, like, why you're buying in that area. You know, one of the most common questions that investors are going to ask you, why are you investing here? So understanding why you're investing there is a obviously important thing.
Yeah, dude. So the biggest takeaway from what I got out of that answer was market research gives you confidence.
Yeah, I like that. Yeah.
It gives you confidence in the product or whatever it is that you're purchasing,
gives you
right?
definiteness, you know, like it makes you definiteness in your aim, and definiteness of purpose eliminates distraction. And you know, I believe it's one of the and distraction eliminates, really, it prohibits decision making, true commitment. You know, like some of the biggest mistakes new investors make when they're going, you know, in regards to like sourcing deals is not choosing a market, like not choosing a specific market to focus on. That's usually because they lack research or decision making, or they don't build teams up in those areas, and that's also usually due to lack of commitment.
Okay, dude. So those are that's huge. I do want to make sure we highlight that. Those are the biggest mistakes that newer active investors, the ones that are putting the deals together, these are two of the biggest mistakes they make. Is what you just said, is not focusing specifically on a market, and then not building a team in that market, right? Dude, that's amazing. Let's dive in there. Just a little bit more. Why is not focusing on a specific market gonna? Dude,
because you'll have so many distractions. Like, if your target market isn't, like, if it's undefined, your deal pipeline, it's like it'll be unmanageable. Like you think about us as like us now. We have thousands of students out there, an army of students out there. They're bringing us deals all the time. We have to be super concrete on where we focus and what we focus on. Like, well, first off, in this specific, where we focus. If not, it'll be unmanageable. There's like, I don't know the exact stat, but 19,000 plus something cities in the U.S. Like, dude, trying to screen deals from those cities or trying to research all those cities, impossible.
Yeah.
Also, if the target market's too large, so like maybe, well, dude, if your target market's too large, it'll be impossible to gain a true like high level understanding of like deep understanding of the market, which will also then help you make educated investment decisions within this market. That can happen if you're focusing on too many markets or just like a really big market, like a big, huge city without getting more granular within the city. So
Gotcha. So what
did you get a new tattoo right here on your wrist?
I did, yeah. Have you not seen that one?
No, I like it.
Thanks, dude.
Yeah.
Thanks, bro.
Sorry, just got a little.
Yeah.
I got distracted.
By my tattoo, my cool new tattoo. Got
That's
that on my
cool. I
birthday.
like it.
Thank you. Yep. Appreciate it. So, off of that, what you just said, now you've got me all distracted, T. No, dude, I had a thought. What was my thought here? Oh, this was my thought. If you have every deal coming into you from all across the country, across all of these markets, you, like, in order for that to even make any sense for you, you need to know the market stats within those markets in which those deals are coming.
Totally.
Or you're just going to get yourself into some trouble, right? A lot of times what I see, right, you say the two biggest mistakes are people not identifying their market, and the other one was not building teams in those markets. Mm-hmm. The third one that I would say in that, dude, is a lot of the times entrepreneurs, people who are going out to be on the active side of putting these deals together, oftentimes people who decide to do this are doers. They're solution oriented, they're problem solvers, and they want to make things work and they want to make it profitable. Yes. So the third thing that I would add into here is trying to make anything and everything work.
Chasing everything.
Everything, dude. It happens. Like, I've seen it time and time again, and it's always from those super high level doers that I see that from. It's like they just are like all over the place trying to make everything work. But like you're saying, it distracts you and dilutes the amount of energy that you can give to what it is you're actually trying to chase, dude. So just wanted to highlight that, dude.
That's a byproduct of not doing the first
Exactly. Yeah.
That's why you got to do those first two things. It's like, and I guarantee you, like any of our students who are listening to this, so many of them have done this. I know it's a mistake you've made. Listen,
can relate to it.
We did the same shit, man. We would chase anything in the beginning. And I'm telling you now from a little bit wiser perspective, there are deals and there are good markets you can all over the place. But it's like you get to find out where that is, will bring so much clarity, you know?
Yeah. You also dove into how oftentimes people will decide on a market that's too large instead of like really honing down in that market on specifics there. Let's dive in there a little bit. What do you mean there? What do you mean there?
Think about New York as an example.
Yeah.
I don't know. This is the first one that comes to mind. Dude, there's tons of different boroughs. Boroughs?
Yeah.
Like submarkets within a market is maybe the best way to put that. There's different submarkets within that market. So you got on an area that big with that many people and that many, it's like, that could vary from borough to borough, neighborhood to neighborhood. Yeah. So you got to get very granular with, like, you don't just buy in New York.
No.
Where in New York to buy in? First off, you don't buy in New York anyway. We'll talk about that anyway.
Yeah.
But also, like, so that. Just
more specific, right?
Yeah,
dude. Yeah, exactly. Another example here, one that's very relatable to us and Multifamily Capital Partners, is a lot of times people will say that Texas is their market. Mm-hmm. What do you mean Texas is your market? Mm-hmm. Houston is the exact opposite, and it's like that market is completely opposite than Dallas.
Yeah.
You know what I mean? And that's both in Texas, right? So that's what you mean, right? Is just honing it down.
Great point.
Economics in cities change.
Yes.
Economics in cities change. So understanding that is really, your market is based on the economics. Mm-hmm. Correct me if I'm wrong.
Yeah, political and economical.
More than it is the area.
What do you mean the area?
So Texas, for what I'm saying.
Oh yeah,
the economies.
So
the economies,
Texas,
right?
I like Texas. Like I like Texas, and I'll do research in Texas because like I like the laws, the tenant laws, and really like what happens in Texas, and really just like the what's the word I'm looking for? Not tenant laws, but the
politics.
Political.
The politicals there are very, very beneficial for real estate investors.
Yes. But the market that we build teams in, it's never going to be. It's not Texas. It's like,
right.
Holy shit.
Right.
Yeah, you hone in on a specific city, right?
It's so valuable. So valuable. Awesome. Okay, dude. Well, let's dive in here to emerging markets.
Okay.
Emerging markets. It's obviously a big deal. You mentioned them prior to. What is an emerging market, and how do you go about identifying them?
Honestly, bro, I think that emerging markets, I'll explain at a high level. I think that should be a podcast in and of itself, probably.
Yeah. On how to identify emerging markets. Okay, dude. Then
stages, but
high level.
High level.
Yeah.
There's 4 stages of market cycles. Okay, buyers 1, buyers 2, sellers 1, sellers 2, and at any given point, a metro area is in one of those 4 stages. Okay, so a full cycle is usually 12 to 15 years. In between each one of these cycles that I just talked about, 3 to 5 years. Now, there's characteristics in between each of these cycles that help you identify like what stage of the market cycle the current city that you're researching is in. But honestly, dude, I literally feel like that's a whole nother episode that we should focus on. So,
okay.
What are emerging markets? Markets that are emerging. That would be in a market that is in a, buyer's market 2 or a seller's market 1. I can explain that on another episode.
Okay.
But how you identify them is you do market research.
Yeah.
So today, man, let's talk about what we research, like what we're looking for when we go into those.
Let's do it. Okay. Let's do it. So how do we first then? How do we decide what markets to research? How do we decide which area we want to go?
Because that's a huge question, because there are, once again, I just mentioned 19,000 plus cities is like shit, dude. So here's the framework on how we do this, okay? Basic framework. I'll give you 4 categories that we focus on how to determine which markets to do research on, because you're going to choose, what I want you to choose is a high level, 7 to 10 markets, metro areas, if you will, to do research on. And then you're only going to build teams in 1, maybe 2 of these. Okay, so category number 1, okay, is where you live, the current area you live. You can learn so much from your own backyard, whether you decide to actually invest there or not. You'll learn a shit ton from your own backyard, walking properties live, meeting with brokers face to face, that kind of stuff. Category number 2 is a market that is easily accessible. That can vary on the person and what their definition of that is, but maybe it's located within a 1 to 3 hour drive. Maybe it's a quick direct flight, something that's it's close by, easily accessible.
Something to get to. Yeah.
Category number 3 are areas that you're semi-familiar with. So maybe you have family or friends who live there. Maybe you grew up there. Maybe you used to live there. Maybe you went to school there. Maybe you visited the city, the location a number of times, somewhere that you're semi-familiar with. And then category number 4 is, dude, any other areas that pique your interest for whatever reason. Like maybe you saw them, that city listed on a market report from some research that you were doing. Or maybe you Googled, dude, apartments, top apartment markets to invest in, or markets with the highest amount of job growth, or fastest growing cities in the U.S. Like some areas that stick out to you for whatever reason. Charlotte, North Carolina, for an example, was one of those areas. I didn't really know much about Charlotte, but I flew into Charlotte one time and was like, man, this place is pretty cool. Literally, that was it. But then what I started to do is then I had to get granular on, is that somewhere that I would really want to invest? And that's going to come down to the data. Like the data, what's happening in that market, and is that like the key indicators that's going on there, and key indicators within that market, and is that an area that I truly want to invest in because I see economical growth?
Dude, right. Got you.
Yeah.
Real quick, before we dive into the key indicators that we're looking for when we go to research these four areas, these 4 categories, is there anything that we should have at top of mind in regards to markets we should stay away from? Like for sure, no markets. Is there things out there that should tell us like that's a market I shouldn't go to?
Yeah, but I think that a lot of knowing which ones to avoid also come by knowing which ones to
go to.
Yeah, what's happening there. So what I would tell you as a basic level, I don't know if you're baiting me into this.
I'm not trying to bait you into anything. No, you've got a smile on your face.
Usually I would say, blue states, don't go to blue states.
Well, why?
Well,
it's important to know
think
that.
about
It's not. It's important that I was more or less baiting you there. Yeah, dude. But it's important to understand
No,
why.
I'm not baiting you. The next thing, yeah.
Well,
you're
no,
right.
I do. It wasn't.
Yeah, I was fucking baiting you.
No,
I got you.
Well, it's not. It's not even that I was baiting you to the political side of things, dude. There's more than just the political
why,
reasons
bro.
on why you don't go to a market.
Think about this. Say you're going to open up a sandwich shop.
Yeah.
Okay.
Yeah.
And you have two options, two areas where you can open up this sandwich shop. One area tells you you can only sell 200 sandwiches a day. That's it. The other area tells you you can sell as many sandwiches as you want to sell, as many sandwiches as the market bears. Which one are you going to build your business in?
The one that I can make, the ones with zero cap.
So I'm saying. So it's like blue states have way more strict laws on how you can actually run your business.
Mm-hmm.
And listen, it doesn't just mean blue, red. That's a very blanket statement that I'm saying.
Absolutely is.
But as a general understanding, dude, usually red states are more prone to landlord friendly, blue states more prone to tenant friendly.
Absolutely, dude. That's the big thing, right?
Yeah.
There's another thing here that I'm also kind of looking for that maybe you can shine a light on. When it comes to areas in the country with maybe bad weather, are those areas that you stay away from, right? Because I know typically
What's considered bad weather? Because, dude, anywhere besides Maui is bad weather in my opinion.
the Sunbelt states, staying away from areas and markets that may have a lot of snow, that may cause a lot of damage or may have a lot of upkeep there, or a lot of flood risk areas due to insurance. Is there any of like those, like economical, geographical things that we should stay away from when we're looking at markets?
I think that those play a factor. Those aren't my main factors.
Okay.
I think that like we'll entertain those areas as long as it makes sense. We have
Yeah.
those within budgets to account for those things, but those aren't my main things though.
Okay. Cool.
But I will say that I like to invest in areas that I actually want to go to though, you know? But
Yeah, definitely. Okay, dude. So what are some key indicators that you research when you're looking into these markets?
so economic, we should talk about political side of things.
Uh-huh.
The economical side of things are very important as well. And really like there's, well, they're not even, it really does come into economical. There's six like, so this framework, okay? There are 6 economical factors that you'll be looking for. So maybe I'll bullet point them, then we can kind of go through some.
Yeah, let's do it.
So you want to look at unemployment, that economical factor.
Okay.
You want to look at population trends, population age, job diversity, supply and demand, and then what we talked about earlier, which is your landlord versus tenant friendly type states.
Awesome.
So, and what you want to do is you want to look at historical trends. Okay, so you want to pull stats from the past 5 years to truly understand the like trends that are happening. So, and how I do this, like I pull stats and I'll show you how we go through, but I like to call the Economic Development Committee, ask them what they're doing to attract jobs, ask them what's going on there. Talk to local team members, your brokers, your property managers, little team members that you're building up. The goal is twofold, right? It's to determine what the trends are, number one, and then what's driving those trends is super important.
Yeah.
What is the trend and what's driving those trends? Maybe I can get into details as we go.
Yes, dude. Let's dive into some of those things. So the first thing that you mentioned in the economical factors that you want to look into is unemployment. Why? Why do we want to look into unemployment, and why is that important?
Job growth is, I would tell you, the most important key indicator we look at, because job growth brings people and jobs that pay these people money so that they can pay their rent, right?
Right.
So it's like unemployment is critical because tenants need a job in order to pay rent. So employment is critical, right? So jobs also increase demand for housing because, once again, jobs bring people. That's economics 101, demand for our product. So jobs are critical. So what we want to do is we want to calculate this unemployment change. And, dude, I'll tell you, so unemployment change that's happening, you can look at it a couple ways. You can look at it as unemployment trends, certainly. You can also look at it as forecasted job growth. And maybe I'll even go down that route for a minute.
Let's do it.
Is that okay?
Yeah, let's go.
This is a way to get into the market early. Usually the metric that we're targeting is 2% year-over-year job growth. From one year to the next year, 2% year-over-year job growth. But how we've been able to get into markets early is we've been able to look at, dude, this data that we're talking about, okay? I'm looking at trends here, this 5-year trend, okay? Because once a report comes out that shows 2% year-over-year job growth, national investors like myself, we flood in. But if we can look at this data, look at these trends, and identify something even before it gets there, we can get in early. For example, like Colombia. Colombia had stagnant. It had some negative job growth, and then stagnant job growth, and it had an uptick of about 1%. So we're researching these areas because we wanted somewhere within the Carolinas, and we see this as we're doing this research, we see this stagnant job growth and then an uptick. So now the question is, once again, so that's a trend, but what's causing that uptick? Call the Economic Development Committee. Start doing the research. We realized that they had elected a new governor for the state of South Carolina that had super pro-business laws, essentially.
The agenda that he wanted to push forward. Yeah.
Yep.
Yeah.
And that's what had caused it. And Columbia, South Carolina was benefiting from that more than any other city there. And so, dude, that's a huge indicator for us.
Yeah.
So what do? We start building teams up within the market, and we took down a shiz load of deals within the market.
There's a lot of units in that. Units in that market for sure.
So, dude,
Ty, over doing that research and finding out all this information, where do you find all this info? How do you find this information?
We cheat now. Like, we have pretty awesome,
the softwares and stuff that do exist.
Yeah.
No, shout out those softwares that we use
CoStar.
now. CoStar's incredible.
CoStar, man, is a crazy tool that we can pull so much data from. It makes our job a lot easier.
And what we use now too is the relationships that we've built over the past 5-7 years doing this as well. Like when doing these data research and this market research, you mentioned it, but working with those brokers in those areas to get that data, to get the actual raw data, you can get those from your brokers and
your
from
team members have that information for sure.
Yeah.
I'll tell you another way. So CoStar is a way to cheat. Another way that we do this is we use some softwares, and one that actually it's called Bright Investor is one that we have. It's one of our students actually who created it.
Yeah.
It's a solid software, man. Bright Investor helps you pull all this data in just a quick, easier format to be able to check these kind of things out. The old way, though,
Valuable.
bro, the old school way, shit, dude. Google the target city, like Google target city unemployment rates, right? I would look for the BLS, .gov search result, that website. I'd click on that one. I'd find the unemployment rate data. I would then go through and click through the 5 year. Like, dude, it's a way more detailed. A lot more clicks. Now there's super cool tools, AI-based tools, right, that help us do that.
Yeah, and even free AI tools that are going to help you find these types of data as well, for sure.
Totally, dude. But with any of that, then what do? You dissect the data. You get the data, you dissect the data, you see, is the unemployment trending up or down? What's the unemployment rate? Is the unemployment rate change over the past 5 years, over the span of the last 5 years, 2 years? Decreasing unemployment rate, that's ideal. Low or stagnant, that's acceptable. But a high or increasing unemployment rate is not acceptable. It's not where we want to go.
No. Would that ever be a good idea to go somewhere where unemployment's down?
No. Especially if it's,
decreasing. It's like my thought is an unemployment rate. If it's an unemployment rate is high in a high net worth area, then those high net worth individuals may need to go into apartments and leave their homes.
Net worth's going to change if they don't have money, though.
Sure,
they don't have jobs.
That's true. It's true. Okay, dude, the second thing that you dove into here, one of those other economical factors that you look into when you're going to do some market research, is population.
Yeah. Same thing, trends, right? So people are our customers. That's demand for our product. So an increasing population, critical. Once again, 5 years of data is what we're looking for. My advice, though, is to look for, you'll have the target city that you can pull it from. You can also have the MSA. So sometimes you'll have, like, for example, we'll do the, Austin, Texas is an example. The city's actually it spans over quite a big span. But you have the Austin city. Well, dude, let's go Columbia. Columbia is a great example of this. Columbia, like the city, if I'm looking at population when we first started going there, the city occupancy had decreased by 2.6% population over since 2016, 17, something when we were doing that research. But the MSA had increased by 4.25%. So look at both to give you a better understanding. We're looking for positive 5-year trends of population growth and positive future population growth.
Yeah.
That's another one.
Dude, you talked about, at the beginning, we look at what's moving the economy or that economical factor, what moves it, and then what is causing that change to happen. So right here, you said when we went into Colombia, there was an uptick in population, right? What was it that was caused?
Migration trends, right? So this is migration trends. So what had caused it? Job growth causes it. More jobs coming in brings people into the market. But the other one is just migration trends, dude. Like, where are people moving?
Yeah.
Where are people moving and why are they moving there? Columbia, South Carolina, cheaper place to live. People can now live remotely. So that's why Sunbelt areas, a lot of these Sunbelt areas have seen a lot of in-migration.
Dude, and it's a beautiful place. Yeah, man, yeah, totally. Columbia blew up. I remember when we were closing that deal, it did. We're talking about Charbonneau. It did delay a little bit because the banks and stuff due to COVID. It did, like, closing was delayed a little bit. And I remember even during that delay time, there was changes within the market.
Totally.
There was changes in the market, and the changes were trending the way we wanted them to.
Totally.
It was a beautiful thing.
We got in early. Yep.
Yeah. Okay. So anything else there regarding population? No. Okay. Cool. Okay, dude.
Population trends.
Okay, dude. Okay, let's dive into another one, dude. I just want to highlight a few of these.
Just more population age, and this
Yeah.
is really gonna help you understand the strategy within the market. So what's the population age? For example, in Colombia, I feel like we just talked a lot about Colombia, but
It's a great example.
But Columbia, South Carolina, their average age was like, we've been out of the market now for a year or two, but it was like 29 or 28 was like the average age in the market. So, and it's critical. It's not a huge factor of, like, it's not a end all be all, like you invest there or you don't invest there, but it helps you understand what types of properties you do invest in there. Someone in their 20s, versus a small family versus someone approaching retirement, all of them have different needs. All of them will focus on different types of assets that they're going to be living in. So what's the population age? And then,
Another one you talked about was job diversity.
So job diversity is, we don't put all of our eggs in one basket.
Yeah.
Right. If you put all your eggs in one basket, somebody will take the eggs and take the damn basket. That applies to so much. That applies to your individual investment portfolio, which is why I'm not a fan of, like, the stock market or single family rentals. It's like, but this also applies to the economy as a whole, right? The economy as a whole. It's like, so I want job diversity, meaning that if everything, I don't know, what comes to my mind is, I don't know why this just came to mind right now, but you think of, like, 08, 09, I think of, like, Pittsburgh, right? Like, Pittsburgh got lambasted. Why? Well, because their whole job industry was all in, it was all in one. Like, it was all just, like, I can't think of the freaking even the demographic right now, but
I can't remember.
Manufacturing type.
Yeah.
Jeez, what's the word I'm looking for? That shit that they did out there.
Yeah.
But here's what they've done an amazing job of is job diversity since then. Because they got lambasted, they learned from it. They made it a huge focus on job diversity. Dallas has a very diverse job market. Dude, really, any area that we invest, Orlando has a very diverse job market. Any area that we invest in has, these things, and job diversity is one of them. And so here's what you're targeting. Here's what you're looking for. You want, dude, give it Maui as an example real quick. Like Maui, we don't invest in Maui. Why? Well, dude, think about Maui or Hawaii as a whole in 2020. Got lambasted. Why? Because everything is in the service industry. All of it. It's like, it's dangerous, man. So we're looking for markets. Here's your target, okay? Markets where no single industry employs more than 25% of the population.
Mm-hmm.
Maui, 35% in the service industry is an example.
Crazy.
It's like where no single industry employs more than 25% of the population. 20% is even better. And you'll find a lot of markets. First off, you'll find a lot of markets that have industries that make up 25% of the job market. It's not a deal breaker at that case, but you have to have a deep trust in that actual job sector, right? And its resiliency.
Yeah.
So,
yeah, we could dive in there, because what's one of those job sectors that you can always trust in, that's always going to be there. So if it is over 25% of your job market, is military.
Military is a big one.
Military is like right. That was a big thing in Colombia. I remember when we closed on Charbonneau. Yeah, and tech
was another one.
They're not going anywhere, especially military.
It's growing a ton.
Yeah, military is not going anywhere. So if that's in your market, and those are the people that are gonna be living in your units, yeah, that's a good one to look for. Another one you talked about, Ty, is supply and demand.
So that's economics 101, man.
Yeah.
You have to understand the supply and the demand, because supply and demand will really help you determine the overall strength of the market, the apartment market, right? So here's your framework. 3 factors that we look at. 3 major factors. We're looking at 5-year rental vacancy rates, like your 5-year trend of rental vacancy rates, your 5-year trend of median rental rates going up or down, either of those, or your year-over-year change in building permits. Year-over-year change in building permits. So here's the ideal situation, okay? The ideal situation is low or decreasing vacancy rates. So demand is high, occupancy, so which means increase, and then also increased median rents. So demand is higher and rents are rising. That's ideal. A huge red flag is when you have an increased number of permits and an increased number in vacancy. So new builds, like for example, where was I at right before I went to Orlando?
You were in Kentucky.
No, I did my last 3 days before that. Denver. Denver has vacancy rates are increasing, new builds increasing. Like, dude, they have a lot of new builds coming in, and vacancy rates have unprecedented number of new builds.
Jeez.
And vacancy rates have already increased a ton.
Yeah, that's not good.
That's not an ideal situation. No. All of those stats, by the way, the things we just looked at, can be found on like the census website as well.
Yeah. And then the last one that you mentioned in there that we already kind of talked about, I don't know if you want to highlight it again, but is the landlord versus tenant-friendly states.
That's it. Maybe here's the thing though. Maybe I'll tell you how to identify them. So you know that you want more landlord. You want to focus on areas that are landlord-friendly states instead of tenant-friendly states. How you identify them. How quickly can you evict a tenant? So these are the things you should research, right? How quickly can you evict a tenant if they violate their lease? Really just the eviction process in general, dude. Like, what's the grace period that a tenant has to pay the rent? Most areas, 5 days. Some areas, dude, up to 9 days. It's like, what is that grace period? Also, how much time do you have to give the tenant in order to, enter and take that shiz over, right? What is it? So you have to file an eviction. Oh, geez.
What's the process? You have to
notice of eviction.
Yeah.
So once you give them a notice of eviction, before you file for it, you got to give them a notice of how long is that period, right? So the security deposit, what's the return process look like? The security deposit limits, which parties typically favored in court proceedings in that area. Like, in short, you need to understand and know how much control you're going to actually have of the business that you're operating.
You need to know the cards you're playing with.
Yeah.
You got to know the cards you're playing with, because if you don't, then obviously you're not going to win if you don't understand those cards you're playing with.
Yeah, it's going to be very challenging.
It's going to be very challenging for sure. No, dude, that's so good. Along those lines, when it comes to like tenant-friendly states versus landlord-friendly states, it's so important knowing that going into it, so you can already start identifying these things prior to and how they may be affecting your bottom line.
Totally.
Like going right into looking into these things, dude. So it's one of the first things that I remember doing market research when I first came on with you and Ryan, and that's one of the very first things I looked into.
What? Was
the control that an owner can have on its apartment building.
Yes.
Like, that's one of the very first things you want to look into.
Well, think about the example we gave earlier of selling sandwiches.
Mm-hmm.
It's like that. What really that's in relation to is rent control. Like, do you have the ability to raise rents as needed or not, or is there rent control in place? It's like, you got to be able to raise the rents in accordance to what the demand is
what the market's doing.
That's it,
right? You can't wait for the political to change in accordance to the market. You have to be able to make that pivot as it's changing.
Makes it a lot more challenging.
Definitely. Dude, anything else that you want to throw out here or mention in regards to market research?
I'll give one more bonus, okay?
Okay.
One more bonus is to check upcoming construction. Check upcoming, it's not just building permits, but like upcoming construction on things like offices or retail centers or really anything else that's slated for construction. Because if there's any of those things slated for construction, that means new jobs. And those individuals need housing. So new jobs meaning these people will be coming in to build these things, and those people need houses to live in while they're building those things. And our apartments are a great place for them to live during that. Your demand will uptick.
Definitely.
Little bonus. Lastly, though, dude, make a decision. Like, make a decision. There's tons to research. There's not one market that's just a perfect market. Research. And not all of these things that we just went through are weighted equally, dude. Not all of them are weighted equally. So, like, what's most important for you? I told you, man. Here's the most important ones. Job growth, most important. Household formations, population trends, those kind of things. Those are the most important things. And then your tenant landlord type laws, I would say, are also very, very important. Job diversity, important. It's like weigh those out, but then make a decision. Like if you're stuck, if you're stuck in this decision or stuck in life, period, it's because you're not making hard decisions in your life. You're not making hard decisions. People struggle to make a choice because they think it's finite, right? Reality, dude, it's like no choice is finite, and very rarely is that choice really there's a million choices that come after making a choice. Just accept that.
Yeah.
Like choice precedes progress, though. You have to make a choice if you're going to on anything, if you're going to progress at anything.
Mm-hmm.
The purpose of this podcast, dude, the reason we do this podcast is to help people what? Grow, dude. So if we ever feel like we're not living up to our potential, if we ever feel like we're not growing, it's because we're not creating, and we're not creating because we're not making a decision. Dude, make a decision.
Dude, I love that. Just to add on to that, oftentimes, like you said people can't make a wait. What was it that you just said? Sorry, I just forgot what you just said. People make a decision. If you're stuck, it's because it's hard to make, because you're not good at making hard decisions,
or you're not making them,
or you're not making a decision, right? Just something I want to add there, dude, is if you're stuck. A lot of times people are stuck, it's because they don't want to make that hard decision. It's because they know what they want to do. You know what your decision is, but knowing that, you also know what action is required after you make that decision.
Yeah.
Right? So I think a lot of times, dude, people do know. They're stuck, but they do know the decision they need to make. They just need to make that decision and then take the action that comes with whatever that decision is, right?
Yeah,
Don't be afraid. Like, your decisions are not finite, and you can pivot for sure. But I think a lot of people are just scared to take action, and that's why they don't choose. They sit here and say they're not choosing, say they're stuck, say they're not making the decision, but ultimately it's because they're afraid to move.
Amen, dude.
Ultimately, it's because they're afraid to take that action that comes with that decision.
Tony Robbins has a quote. He says, knowing is not enough. You must take action. Knowing, or lots of people know what to do, but few people do what they know. Knowing is not enough. You have to take action. It's like, I know, dude, that if I want to get in shape, I have to eat healthy and go to the gym.
Yep.
But I love eating shit. And maybe I don't like going to the gym. I don't know. It's like, we know what we need to do.
Right.
But knowing is not enough. We actually have to take action on the things we know. Same thing here, man. Knowing, you now know what to research, but that's not enough, man. You got to take action on the things that you know. Go research, go take action on them, make a decision.
Yeah.
And go.
So good.
Love it.
Ty, in closing here, Hawaiian Value.
Can I cover this one?
Yeah, go ahead.
I loved it. Great choice. Jay put this in, dude.
It's a good one.
Ike Loa. This is seeking knowledge, dude. Always growing, always learning, always like growth, dude. It's growth, really, man. It's like being curious. It's always asking questions. It's growing. It's learning. It's like never stopping that process of self-growth. And I believe that the minute you stop growing is the minute you lose your ability to impact other people. It's the minute that you lose your ability to lead. It's the minute that you lose traction and momentum in your life. It's like you have to always be learning, always be searching, literally searching for knowledge. And as you search upon that knowledge and then, like you said, take action on that knowledge, shit, dude, sky's the limit, you know? Sky's the limit.
Yeah, that's where the real change happens for sure. Love it, man. Love it.
Anything else you want to mention there?
No, just I love this value because it really, I mean, it's something that's so deeply rooted in the Hawaiian culture is understanding the world around you and how it affects you.
Yeah.
So when I look at that and I look at your market research, when you're going in and you're understanding that world, that market, that area, you're understanding, like, trying to use this Hawaiian value and the importance of understanding it. You're looking at that market from the scope of, I'm understanding this information because I want for my actions and me buying this apartment in this area to amplify everything that's happening in this area. Not to be selfish, not to, because it's going to benefit me, and I'm going to make all this money because the market's a good market.
Yeah.
But when you really stop and learn about what's around you, you can learn and understand how your apartment that you're going to buy in this market is going to enhance that market and enhance the world in that area. It's just trying to always keep that at the forefront.
Love it.
Right? Keeping your why bigger than you.
That's it.
Keeping it on those tenants, on your investors, their money, their hard-earned money, that you have the ability and the trust to take care of that money.
That's it.
There's a lot there. So
and
really
then
just
also
educating, yeah.
go make shitloads of money. That's good too.
Oh yeah, definitely.
All the above.
Definitely. Yeah.
Love it. Hey, thank you all so much for tuning in, man. Hopefully you found some value here. Go do some market research, make a decision on those markets, talk to the why you're investing in those markets, all those kind of things. Man, leave us a review, subscribe, share this thing, man. And then always, let's do it in unison, bro. Always invest with Aloha.
So bad.
Always invest with Aloha. We'll do the peace in unison. 1, 2, 3. Peace!
Multifamily Mindset Podcast. Think bigger.